Morning traders, Paul here with GammaEdge. It is Thursday, the 26th of May. Go ahead, pause your players. Please read this. It's important to you, it's important to us. Thanks. Taking a look at the market model, we're seeing some good improvement on the ARCX, which we think is the probably the quality cumulative tick indicator of all the ones that are out there. Still note, historically, downtrend on the what we call the ribbon, but we are moving up into this area. When we cross into this area, we've typically seen a transition in the overall markets. You can see we're continuing to make higher highs and higher lows, and that's a fairly significant turn of events given where we've been for the last 6 weeks or so. We're looking for these continuation patterns to the upside of putting in those higher highs and higher lows. So look for that as we go forth. And also just keep an eye on, can we break through the historical moving averages for the cumulative tick and push higher. So constructive, keep an eye on it. 2, 3, 4 days of short covering and reversals typically will cause us to fail. It's been basically the last 2 or 3 months, and we're looking to see that pattern is broken. Taking a look at the overall indices, the SPX, the SPY, the Qs, and IWM. Across the board, we're seeing puts being reduced and calls being added. We haven't seen this in a while, so this is notable. All the data is in here. Pause your player, take a look at this as you see fit, or run the charts in the Discord. And here are the Qs and IWM, just for your own viewing pleasure. Near-term expiries, we're between the goalposts to a large extent, and we're very, very close to the expiry zeros. When we are close to those expiry zeros, we're not going to see a lot of pressure due to the expiries. We're not going to see a movement one way or the other. I have called out where the zeros are in the individual symbols. As we approach those, either from the left or from the right, expect a lot of whipsawing, drifting around. As we move further away into one zone or another, we could see more influence there. Just remember, if we pull downwards, because we do have a net negative expiry occurring on the SPY, the Qs, and the IWM. If we do pull left, we could actually see a monetization to the right. If we pull to the right, we could actually see a monetization which will push us down. So because these are equity settled, that is something to pay attention to, and just be aware that there is the potential for the expiries to have an influence. Remember, SPY, Qs, IWM are Friday expiry. The SPX is today. Taking a look at the gamma histories, not seeing a lot of pressure one way or the other, seeing just some minor level shifts on the most recent charts here. You can read the details here. Overall, not seeing a fairly large anticipation of a move higher or lower. I'll note a couple things that are a little bit abnormal. This is the POI line. This is the put open interest, dominant for the entire Q structure. When we see this remaining below that for some time, remember all of these puts at this level and below, or this level and above, excuse me, are in the money. And that's a fairly significant thing. Any pressure to the upside, we could see a monetization event, which could force them up. You can see, though, on the SPY and down here on IWM, we do not have those conditions, and there's actually quite a bit of space between the COI, which is the green line, and where we are here. We're not seeing positive gamma advance downward to anticipate a short-term move. So in general, we're not seeing a setup here that is indicative of a major move to the upside. We're also not seeing a lot of anticipation to the move to the downside. So more status quo, I think, and just a grind to these different resistive overhead levels with some floor support in there. Flow summary, fairly interesting differential. Across the top, we have the next 30 days. The second row of charts are beyond 30 days. And this gives us a view of what's happening in the short term versus what's happening in the long term. On the short term, virtually net flat. Basically, for the SPY, we did have some calls that were added and then remained fairly constant, and then they were monetized into the close yesterday. At the same time, we actually had some puts that were monetized also, and that's what this is telling us. Little longer term on the SPY, we're actually seeing some positive behavior on the calls here, and correspondingly, we're seeing some addition of puts late in the day, near the close, near the highs, slightly off the highs, but near the highs of the day. So people are hedging both ways, taking advantage of a potential move to the upside over the next, beyond 30 days. Nevertheless, they're also protecting to the downside, especially as we move up, puts become cheaper, etc. The Qs, not seeing a lot of what I would call constructive behavior. This is a single event where we closed a lot of puts. In the Qs, you can see the calls were relatively flat on the short term, but on the longer term, a lot of downside protection being added in the Qs. Calls, no demand whatsoever. Taking a look here at IWM, magnitudes are a little improved of what we've been seeing. We saw some puts being added, and then we saw some puts being taken out in the short term. In the longer term, we're actually seeing a few of the puts being taken out, but look at the magnitudes here. IWM has just been incredibly weak in general. You can see not a lot of big order transactions in premium flow. It's just hard to gauge what's happening when you have very, very little pressure one way or the other. So across the board, you can see short term, maybe a little bit more bullishness. Longer term, we have a mixed picture. That's going to be very difficult to resolve and pick a direction when you see for instance, you see the SPY anticipated move up, but the Qs potentially having a downside move beyond the 30-day mark. Taking a look at the true gamma zeros and the delta zeros, everything still continues to advance down towards spot. What we need to have happen is we need to have spot move above these things. And so the key ranges here are about that 4060 level up to about 4200. And so as these move down and price moves up, we'll have confidence of a sustained rally when this picture inverts. We're not there yet. This could become overhead resistance. We'll just have to wait and see. Remember, negative deltas, when we see them here, are by our measures here, are the addition of puts to the complex, so downside protection, and negative gamma is the same thing. When we see the true gamma zeros dropping, it's because puts are being added faster than calls are being added. Taking a look at the 0 DTE, this in the circle 1 here indicates it is a single expiry that I'm showing here. Positive, very weak here at circle 3. 4 and 5 call out some key levels. If we do break above the 4,000 level, we could push upward of this 4075. I'm not anticipating it, but it could happen. Note that the 4,000 strike in the SPX is a very dominant strike, but again, when we take a look at the overall expiry for today, it's relatively weak. Transition zones here below 3,900, not seeing it in the short term. That's where the negative gamma comes in. We have positive gamma really rolling in here. Note that we do have a little pocket here, so I would keep an eye on this. If we do bounce up against that 4,000 like we did yesterday and bounce off of it, we could pin in this area again, so just be aware of that. The combo, which is the AM and the PM settled, or just the SPX, we do not add the SPY into that, which is different than other services that are out there. Key things, net negative, still very, very, very negative number in the overall gamma. It's going to be difficult to plow upwards and get through this without clearing this and turning this overall structure into a positive environment. Note that we still have call open interest and put open interest here at 4,000, very significant negative delta level, and we're very close to it. Just be aware of that. So we still have a lot of negative delta sitting out here with the dominance here on the put side. You can see 423,000 sitting there. 297,000 calls sitting there, which has given rise to that net negative delta here. It's going to take a lot to get through here. Expected range is shown here in the blue. To the downside, we don't get into just solid negative gamma levels until we get down below the 3900 level. Not anticipating that, but just be aware of the key levels. Your eye is pretty good at looking at the halves and the quarters, and you can see where we could get sticky. Couple of notables over here on the right hand side in the lower corner at circle 4. 27% of the SPX is projected to come off on the 17th, and all these other numbers add up. Even though there's 0 in there, it's just a rounding phenomenon on the chart. Just note, we've got quite a bit that is going to be expiring between now and the June expiry, so that'll be the quarterly. That'll be fairly significant. We're watching that and watching what potentially could happen, especially the shift afterward. And as you know, we have the tools to look at that in pretty good detail. Taking a look at the expiration here, positive expiry, as I said, negative on Friday. Next week, the May end of month is sitting here. Just be aware that that is the largest dominant negative expiry that actually could push us upward. This is Tuesday, Wednesday, Thursday, Friday, and you can see Wednesday, Thursday is really shaping up to be nothing. Nobody is trading beyond that. There is just, it's flatness. We're holding relatively steady for the June expiry here. Just be aware of that too. So when we get this kind of behavior, we're going to be coasting into the Tuesday after the holiday, after Memorial Day holiday. And I think we're not going to see a lot of push until we start getting some of the expiries off and start seeing some of this develop into the June expiry. As far as I'm concerned, this is the one to watch, and then through next week, especially with the shortened week, will be interesting to watch. This is probably the most impactful, at least from my perspective, in looking at the overall charts. Transition area, it's fat. We've got a lot of calls that have built out in the near strike range. The far strike range, we still have quite a bit of puts there. This is an inverted structure. This is not very constructive to moving higher. The reason for that is that these are deep in the money right now. We're down here, and so while any monetization as we move up through this structure, any monetization will pull us upward due to dealer response. Any monetization here will actually cause us to come back the other way. So we've got this fulcrum that's sitting right around in here of the balance of the in the money puts and the out of money calls here. Pretty important. You can see these dominant levels that I've called out here. We've got a lot to get through. We've got some major levels to look at and watch here. I just don't see us getting here very, very fast, and we've got a lot of overhead to plow through. So the summary for today, again, the cumulative tick market model, it's bearish, it's weakening. CT is moving into the ribbon on the ARCX. That's important. This is get your long shopping list ready, but I don't have a lot of confidence that we're going to advance for the reasons I just said. On the shorter term, we are looking for a rally. We're looking for that follow through or that continuation pattern. So you can play the upside, but do so strategically and most likely short term. All of this paper money, of course. On the SPX, the 4060, 4200 looks to be pretty much the dominant overhead level right now. It's going to take a lot to get through that for the reasons we talked about with the call structure and the put structure and things related to that. We are ready for a move through 4,000. Could stall at 4,000 like we did yesterday, but we're looking for a retest there. If we do move through this, we think 4060 will be the next short-term stall level, overhead level, so keep an eye on that. And then the longer-term structure of the SPX is inverted, and that's really this picture here. When we see that, we've got this significant ITM puts for the reasons I just talked about with the OTM calls, and that flips the model. It actually puts a divergent push-pull on the overall price movement, so we're going to have to watch that. So that's it for today. If you like today's content, please come and join us at GammaEdge.us. That'll take you to a sign-up page. It'll get you into the Discord. All these tools are there. You can kick the tires and talk to the traders. We've got a great group of people, very active voice channel. Really urge you to come in, and no risk to you, 14-day free trial. So it's It's a lot of fun, actually. We've got a lot of good people of all experience levels, and a lot of learning going on. So it's great fun. Follow us on Twitter, please. GammaEdges with an S. And then here on YouTube, of course. If you like today's content, please hit that like button and subscribe so you get notified next time that we post something. So that's it for today. Make it a great Thursday, and good luck. We'll see you in the Discord. Take care.